Loss-making Felda is reportedly working on hiving off its equity in Maybank, the country's largest lender by assets. Quoting information from a term sheet, Dow Jones says the state-owned conglomerate is looking at selling its stake at 8 ringgit to 8 ringgit 5 cent a piece. That would raise up to $63.1 million or about 281.8 million ringgit. Felda was listed on Maybank's FY15 annual report as its fifth largest shareholder with a 1.9% stake. The banking group closed today at 8 ringgit 5 cent, bringing its market cap to almost 83.6 billion ringgit. Felda has been under the spotlight recently for its controversial decision to buy a 37% stake in PT Eagle High Plantations. That's a premium of 95% over the Indonesian firm's last closing share price at the time. Late last month, it secured government financing to fund the 2.2 billion ringgit acquisition. Eagle High is a unit of Raja Wali Group, which is controlled by Peter Sondak. The Indonesian billionaire is said to be close to PM Najib Razak. Meanwhile, Felda Global Ventures Holdings, or FGV, has denied talk that it is being taken off the market. The plantation giant told Bursa today there have been no discussions on the matter at Felda's board level, and that it hasn't received any proposal from other shareholders to privatize it either. New Felda chairman Shahri Samad sent tongues wagging last week after he touched on the possibility of delisting FGV. He had said that the group would need to study the advantage, risk factor and impact first. In response, Co-op, which holds a 5% stake in FGV, said such a move must be backed by sufficient rationale, while PKR Veep Rafizi Ramli warned that the act could lead to losses of 7.8 billion ringgit. Singapore's just announced its Causeway Toll tit-for-tat hike. According to its Land Transport Authority, all foreign registered vehicles entering the country via the checkpoints at Woodlands and Tuas will be charged $6.40 per entry. That's about 20 ringgit per motorist, which is how much Singapore vehicles have been paying to enter Malaysia since last November. The $6.40 is on top of the existing vehicle entry permit, fixed electronic road pricing and of course toll charges. It will be imposed starting February 15th. Motorists who evade the fee will be made to pay $50 or about 156 ringgit. Repeat offenders will have to pay double that. If they don't pay up, they could be fined up to $1,000, about 3,126 ringgit, or jailed up to 3 months. Malaysian home buyers have apparently started to accept pricing realities and are now adjusting their expectations. According to a survey by Property Guru, 58% of consumers are likely to buy a home within the next 6 months. About 38% would go for brand new homes, while 15% would opt for the secondary market. Country manager Sheldon Fernandez says many consumers now accept that home prices are unlikely to crash like in 1997 or 2008. In fact, he believes prices will either remain stable or continue to appreciate, though at a more moderate pace, thanks to new MRT lines and transit-oriented projects. Of course, accepting pricing realities doesn't mean that buyers are happy with them. The survey shows that 59% of respondents felt that homes are still pricey, while 49% are worried about the ability to secure loans and capital for the down payment. On the whole, 38% are satisfied with the property market, a 10% improvement from the first half of 2016. Franklin Templeton Investments sees opportunity in Malaysia thanks to the weak ringgit. Emerging Markets Chief Stephen Dover notes that Malaysia has become much cheaper than before. That makes it more attractive to international investors. And despite the volatility in the currency, he says Malaysia has been a very resilient economy and is growing at a very healthy rate. Dover believes that the concerns surrounding protectionist policies by the US as well as commodity prices have been overblown. He also thinks that there has been a misconception that an increase in US interest rates would have a direct negative impact on emerging markets. In fact, he says any hikes in the US interest rate would actually be positive for emerging markets like Malaysia, since this would signal growth in the US economy.